Good afternoon, all. How are we doing? Sorry, I'm in casual gear today. I've been gardening. What can you do? How are your day? Afternoon, Monkey, FTNet, Evil, Callum, Danny, Mumo, Mark, Marcus, Amy, Gregors, Philip, Marcus, again, Jakarta. Chucks, Fletch, how are you doing? Afternoon, Brian. So, busy news day today. Ryan, just past FTMO challenge. Good job. Swiss franc, perhaps? So, yeah, back to load on the Swissy today. Very good. So we had some big news today in regards to the Swissy and the pound. So, this morning, obviously, was the SMB policy rate. And they dropped it, which I suspected would happen, just because that's what they do. Just don't bother telling us. You can see if you open up the last releases and look at the frequency with which they make unexpected changes. Yeah, it's only 3 times, but if you look at it, it's 3 times a year. So a third of the times they release news, they change their mind. They don't tell us. Yeah, so it's quite a lot when you put it in that respect, isn't it? 3 out of the last 1, 2, 3, 4, 5, 6, 7, 8 changes have been unexpected. So the interesting thing as well that they said, we'll go through the news in the press releases and everything in a minute, but they are looking at intervention as a possibility if required in both directions, which again adds another level of complication to trading the Swiss franc, because if they're going to start to intervene without notice and not necessarily powering up but also depowering their currency when they need to, it means that you are literally flipping a coin trading the thing, because the fundamentals just do not have any impact. So Swissy becoming even more unpredictable than it has been. Pound rates as expected. Wasn't expecting a change. There was a possibility of a drop, 50-50-ish, but especially after yesterday's CPI hit. So we are now at target. That is the Bank of England target for reducing rates. We've hit it. A little bit soon to do it. And I think the Bank of England didn't want to be seen as using interest rates as a political tool, because we've got a election coming up on the 4th of July, and obviously them reducing rates ahead of that could have been seen as political. So they've kept it as it is. Everybody voted to keep it the same. So that was the bit that I wasn't expecting. I was expecting this to be different because of that. We didn't get that. So 7 out of the 9 voted to keep rates as they are. 2 out of the 9 voted to drop rates. So it's definitely bearish. And we've also had the unemployment claims for the US this afternoon, which came out as forecast. So that's all the news today. We'll have a look at the actual press conference information as well, and the monetary policy statements. Thank you for the $10, David. Thank you very much. Very generous of you. Is this because you've got a new job? You're feeling very flush. Thank you very much. Much appreciated. $10. Very much. Steve. Afternoon, Freeman. Good day, my guy Steve, David says as well. Steve, you're almost as popular as me. Crom, afternoon. So financial juice, going back to the Swiss. The other thing as well, going back even further than the Swiss, we've had overnight, which again adds another element of what the hell to the whole debacle of intervention. Check this out. Kanda, we will thoroughly respond to FX excessive Forex moves. There is no limit for Forex intervention resources. That bit specifically is the bit that pricked up my ears this morning, yeah, because we've been saying, have they got the ability to intervene again? Have they shot everything in that last intervention attempt and they are now unable to intervene again? Kanda basically coming out fighting, saying there is no limit to what we can do with intervention. We can definitely intervene again. Yeah. Forex market is determined by various factors, including interest rate, blah, blah, blah. So again, Canada now starting to say, oi, stop it. If you carry on pushing, we will intervene. So we're back to the cycle again of the US dollar yen pushing too far, too hard. The Japanese saying, if you do not stop, we will do one of those to you and it will hurt you. So interesting. If you look at where the intervention level is, previous intervention level is, so the 150 that we spoke about previous, which was the previous intervention level, we got the reaction at before. 160 is the new intervention level. Highly likely we'll get a reaction there. Whether it's an intervention, we don't know, but it's highly likely the market will crap itself and undo the moves that it's used to rally. So watch that. It's 225 ADR away from where we are, right? And we've got PMIs tomorrow. So US dollar unemployment came out as forecast, and off the back of that, we've had a little bit of a rally today. So the US is starting to rally. If they can get an ADR hit today and hold it somewhere up here, it means that tomorrow we are literally an ADR away from hitting intervention. That obviously can happen very, very, very easily tomorrow because we've got what? PMIs and a quadruple witching. So there is a strong possibility if we get bullish PMI figures for CAD, not so much for CAD, sorry, for US dollar, and we've got CAD retail in there as well, which might help. If they come out as bullish tomorrow, that US dollar is going to do an ADR. If that US dollar does an ADR, it's hitting intervention. So that's very important. It's never red. I don't know why Financial Juice do not put this in red, but it is critical to movement on Japanese yen. So that's the overnight news. Obviously, SMB prepared to intervene in currency markets if needed. There's the interest rates, the inflation numbers, forecasts. So interestingly, they're forecasting inflation this year to be 1.3. We're sitting at 1.5. 1.4. So they're forecasting a slight reduction again in inflation, meaning you've got to get those rates down. Inflation at 1.1 in 2025 and at 1% in 2026. So completely under control, but reducing, meaning interest rates they'll want to get back as low as possible, as quickly as possible. And obviously they have come out and also said here, again, later on, Forex interventions can be in both directions. If we want to, we will just do a 300 ADR move that way. And if we fancy it, we'll go the other way. They can do what the hell they like. So yeah, interesting. NOT came out as well this morning from the ECB. We are forecasting 2, possibly 3 rate cuts from the ECB. CPI for the Bank of England is expected to rise to 2.5% shortly. So they are expecting a bounce, which is why we did not get the rate drop today. They're expecting that to bounce back up again because we've dropped so fast. Remember, we went 0.9 drop. Now we've gone a 0.3 drop. Get my figures. Yeah, 0.3. So we've done 1.2% drop, basically, in inflation in the last 2 quarters. So that's why they are expecting a bounce, because it does not come down like this. It always comes down like that. So we're going to get a bounce potentially on inflation. So this move down we've had on the pound today is probably temporary. Because although, yes, they are going to drop rates, it's not going to be till August. So possibly July, but more likely August. So we got a couple of months basically where the pound isn't going to be dropping rates, but it's certainly not going to be bullish. So either way on the pound. GDP, there you go. So rate cuts, 47 basis points this year, which is 2 rate cuts at 0.25. So 1 in August, probably skip September, 1 in October, then see what it's like at Christmas. So that's basically the new forecast for the US, for the pound. And that's it. That's your news. Market's about to open. So we'll see where we go with the US today. We've had a bit of a weird day so far. on this US. We've had a drop on the indices this coming into the open, basically, in a rally pre-market. So we got this whacking great propulsion gap still. Excuse me. Gardening. Does your head. It's exhausting gardening. I'm not that old that I need to garden regularly, but I had to dig over a massive 20-meter flower bed, which was quite hard. Anyway, so drops basically down are on the cards. The market, as you can see, struggling at the moment a little bit. It is bullish, but it's only bullish on news. It's not bullish in any other way, shape, or form at the moment. And tomorrow we've got that triple witching, quadruple witching, whatever you want to call it. So tomorrow is going to be a big day on the indices. So we may well get a fairly quiet open today. We will see where we go. So we just watch the open, then I'll have a look at the FX stuff. David is funding the Big Mac account. Yep. Pretty much solo. Thanks, David. Only I ate Big Macs, so I don't eat them anymore. What's going on? Oh. Wow, what's going on? Oh, there we go. God, that was really delayed. That took ages to trigger. Range sizes for some reason. Weird. So no pre-market on the S&P. Range is too tight. The others are fairly decent. So we'll see if we get any movement. This looks like a lackluster market this morning. I don't know. Might get going. Yellen a few weeks ago said that intervention needs to be rare and well announced. Yellen did. Yeah. Well, they're certainly announcing it now, aren't they? Afternoon, Blue Trader, Pontevedra. At the moment, summer is not knocking at the door. It is in Turkey and Greece and places like that. It's absolutely baking. Tomorrow will be interesting. Yeah, very interesting. That Discord troll spam the other day was annoying. Woke me up. Some people have nothing better to do. Yeah, I don't know what that was. Very intrusive. Pretty much kept posting in every channel, and I haven't found a mass delete button for that yet. I blocked and immediately deleted it, but it didn't seem to do it in the whole Discord server, which is very annoying. But anyway. Afternoon, Virginia. So market broken short on the Dow and the Nasdaq. So watching the 2-day low and yesterday's low on the Nas. 2-day low, we've tapped straight into yesterday's low and bought that up basically on the Dow. So if the Nasdaq keeps dropping, though, I think the Dow will probably go with it, but we'll see. Nice break on the Nasdaq, target hit. So a nice quick scalp. We're just coming down to yesterday's low on the Nas now, which is there. Dow rejecting the lows. Come back to that in a minute. Right. FX stuff. So, a lot of movement today. US dollar yen's going again. Look. These indices come down today. The US is going to rally. So I'm so tempted to jump in a US yen. I might do it on the FTMO account, actually. I might wait till end of day today, actually. I might take one on FTMO. RSI massively extended. Daily RSI2 is currently sitting at 99. So it doesn't get any more extended than that. Well, it does, 100, but it's fully extended. So still worried about holding it with swaps. That's the only thing. Swaps are very expensive on it. Look at the euro pound. I'm paying $150 swap on the euro pound at the moment. Holding it since the 12th. 8 days I've been holding that. 8 days I've been holding that. Oh, blimey. Yeah. I'll be getting out of that soon. So yeah, nice day today on the FTMO account. 1.1 banked, up to 4% now, halfway to target. Got 0.5% I can bank now, but I've got nothing else on at the moment. So good day. Banked 0.5% on pound CAD today. So I got out of some more pound CAD. So I took that one off fully just before I came on stream. And I took off, you got to go back away, haven't you? So the final part of the initial position, so that was the first entry short on this back on the 14th of May. So I've closed out the last portion of that, which was a 0.35. So I'm just left with 2 trades on at the moment. Break even is here. TP is this low. So if I can get out of that TP, basically, all of this drawdown control that's been done, I'll have to do the maths on it, but I'm probably going to come out of it roughly break even, which is all right. You know, it's been a long trade, but you know, this is the whole point of position trading. We get in May. If we're wrong, we hold it and we get out at a break even. We don't take thousands of losses and lose our account on the way. We just get out because we were wrong. So good example of aggressive drawdown control and holding a position to do what we know it does, basically. So I got out of that one today, banked 0.6%. The rest of my TP is here, look. So if we can get a push down to 150 ADR today, that'll be gone. Euro pound, I've got a little bit I can bank on as well. I'm waiting to see what they do with this pound move. So obviously the pound is dropping, as you can see. So euro's rallying against the pound, but the drop is not dramatic. That was the news, yeah. So it's not a massive massive move on that news. If we look at ADRs, the pound pairs, you got the pound CAD, which has hit ADR, and you got pound Swiss, which has hit 125 ADR. Obviously, the Swiss franc had a massive drop today. The pound has dropped. So that's really Swiss franc. So if you look at the ADRs today, it's all Swiss, US Swiss, New Zealand Swiss, pound Swiss, Euro Swiss, CAD Swiss, Aussie Swiss, obviously, because of the Swiss franc drop without telling us. The Swiss yen as well, obviously, is hit. So all the pound pairs, we've had a drop, but you can see the drop here on pound odd, for example. Odd's obviously neutral because it's Asian, so there's no Australasian rather, so there's no activity much in the London session. We've managed to do half an ADR. So we've had half an ADR of movement there. We've had 1 ADR movement there. That one you can ignore because it's Swiss. Against the yen, we've had nothing. New Zealand dollar, virtually nothing. And the US dollar, virtually nothing. Yeah, so we're nowhere near ADRs on it. So that just shows you how little the markets reacted to the news today that they haven't changed interest rates. They haven't changed interest rates. So, yeah. And it's not massively bullish. What was said today by Bailey in the summary wasn't particularly bullish or bearish. It was, yeah, we're not doing it at the moment. We will probably do it in August. That is basically the upshot. So it's a no news event, which is why we've had no movement. Swiss franc, on the other hand, huge ADRs on the Swissy. As usual, they changed the rates without telling anybody, dropped the rates, and the market is undoing the previous move. So we are basically undoing this move at the moment. That propulsion gap, I suspect, will hold, and we will continue in that direction. So longs against the Swiss franc are not a bad idea at the moment. but we'll wait and see. The Swiss have come out today and made it very clear in no uncertain terms they will move this wherever they want to move it. Yeah. So you can do what you like. If you don't fancy buying us, we'll buy ourselves. Yeah. So as you can see, that's what they've been doing for the last couple of weeks. So it's still difficult to forecast a direction on this. Yeah. Jordan has come out and said, obviously, they will intervene. And intervention from the Swiss, we're prepared to intervene in currency markets if needed. Intervention in the Swiss doesn't mean the same as it does with the Japanese. With the Japanese, they basically liquidate all of their overseas US assets and buy the yen. Yeah, so you get a huge 3, 4, 5, 6, 7, 800 ADR move, depending on how much they do. With the Swiss, they will do this. They will just keep buying the Swiss or selling the Swiss over a period of days. So it goes into nasty, vicious trends, which last a week or so. As you can see, very similar to what we've had there. So that's kind of what you should expect from what the Swiss class as an intervention, I think. It's not going to be a massive 300, 400 ADR in one day. But all these Swissies, we've had a big multi-week sell-off on them. So there's, should be able to unravel those moves. But normal market structure is made from banks taking profit on movement. The Swiss have basically just said, you can try and take profit if you want, but if we want it down there, it's going down there. So is it going to move in the same way as we would expect? I don't know. So just bear that in mind with any Swiss that you trade. I'm going to stay out still because at the moment, they've done what I was. The reason I'm not trading the Swiss is because they do stuff like this, and they did it last time. I'm still not sure what to do with the Swiss. So just got to sit there and go, well, let's just hang on and wait and see. So I think at the moment it's a case of if you want to trade it, but probably want to reduce your risk on it because you might have to be in it for a little bit longer. The other thing you've got to bear in mind with the Swiss is your swaps. So you got positive swaps on buys against the Swiss. Yeah. So if you're selling the Swiss franc, you're going to get positive swaps, which means you want to be long against the Swissy. So that would be the preferred thing to do. Going the other way is going to give you negative swaps the same way as it does with the yen because their interest rate is so low. Yeah. So if you short it, which is what you would probably want to do when the yen, when the Swissy powers up, obviously, it's going to cost you a load of money in swaps. So just be aware of that. But all moved massively today. We got 150 ADR there against the euro. There's loads of propulsion gaps to the upside. And if we do come down into here, that's the likely movement. So I would personally want to be doing that and looking for opportunities down here. So if we get ADR hits to the downside or RSI extensions down, I'd rather be longing it at the moment. Is it safe to trade on prop? Well, I was long in it. So what I've banked today is a load of Swiss. So New Zealand Swiss. Yeah. So I took that. I took it off there. US dollar Swiss I've taken off. I've kept CAD Swiss running. So that's my runner, basically, the CAD Swiss. So I'm leaving that one going, and I'm going to try and get a decent run out of that. And the pound Swiss. Had 2 buys on that. That was a break-even one, which I took off because I was overexposed. And took that one off last week. Obviously, could have had more out of it. So it's up to you if you want to trade it on prop. Don't forget, prop is just fun. It's fun money. It's not real. Yes, you will get paid, but trading things like the Swiss franc are going to be very lucrative. However, you still need a bias right now. Tomorrow, if this rallies, you're going to get a signal to short that on RSI 2, aren't you? So yeah, it's a good looking short, but are we going to pull up and undo that leg? It's a double bottom bounce on a fundamental. Don't know. It's what props all about. Gambling, basically, isn't it? I've got 5% drawdown to use in a day and 10% drawdown to use on my account. If I get the Swiss the wrong direction, I'm going to get run over. Don't know. I'm trading it on the prop because it's not real, so it doesn't matter. Don't forget, I'm in an evaluation, so I don't care. My job is to get 8% profit, an unrealistic profit target within a couple of weeks. It's not unrealistic, but so yeah, I will trade it. Isn't the Swiss intervention talk a good thing because it means that if you get stuck in a squeeze on it in the other in either direction, they'll help you unwind it? Think of the opposite though, AZ. Yeah, if you get stuck in a squeeze on it, they might squeeze it further. Yeah, squeezes go both ways. If you get stuck in it because it is squeezing or they are squeezing it, they could squeeze it further. The normal currency movement is based on bank movement. So if you pick something normal, like the pound US dollar, for example, this is profit-taking moves, basically, which is why we get structure in markets. If they want to take it in that direction and carry on taking it in that direction, and they've got the money to continue to do that for as long as they want to, they can also do that. So basically, their banks are in control. This is why the banks make money, because they have the power. They're the only ones that have the power to move this. If there's a central bank that says, actually, I fancy this down here in the next week, they will move it down there because they can. If there's a load of people against them, it's going to be harder to do it. But at the end of the day, you've always got enough back there to chuck more at it. With someone like the Swiss or the Japanese, when they do the interventions, theirs are like much bigger. But with the Swiss, they can rally for ages. If you look at the Euro Swiss and some of the moves we've had on the Euro Swiss, yeah, that's not Euro strength. That's Swiss devaluing. And so look at some of these moves you get over a period of 2 weeks. They are huge drops because they can. But they will most of the time unwind. But if you get stuck in that, you're stuck in that from January to March. 3 months. You're not getting out. They don't want to let you out. Look at this. That's a big old move. And this is Swiss. But it's also combined with Euro dropping their interest rates as well, isn't it? And the market's scaling in to a Euro drop. So this is the perfect storm at the moment. The problem is you don't know what they're going to do and when. And this is why I decided to get out of it after I made the last loss on the Swiss, because I really have no idea what they're doing. They don't do the same thing as everybody else does, which is why a lot of people just don't trade it. But like I say, I've always had nice profit out of the Swiss. But again, I have always been in some of my worst squeezes on this thing as well. US dollar Swiss in the run up to Christmas a couple of years ago, I got stuck in it and I couldn't get out because the Swissy just rallied. We didn't get the Santa rally that year, which was a problem. But we'll see. But yeah, is it safe to trade on the RSI too? So anything you trade with a stop loss, David, yeah, not a problem. Because if it goes wrong, you stop out. So, every trade I take here has got a stop, yeah? RSI 2 is a stop loss based strategy. What your stop is discretionary. I've tested everything. I've tested from half an ADR to 5 ADR stop losses. Pretty much everything works because the strategy is get out when you've got a profit after market extension. So, but if it goes wrong, it goes wrong. I had a losing day on there, which was US dollar Swiss. Was it? No, hang on. Yeah, it was. There you go. So US dollar Swiss. Is that maximum zoom? Really? 4 hour. There you go. So it went long. There was my stop loss. That was a roughly 1,200 pound, because it's a pound account, this one. And then I got it back with that one. But it was a... Why did I take that? Oh, no, this is one we looked at the other day, wasn't it? On the 4-hour time frame, it was a short signal. On the daily time frame, it was a long signal. Goes to show. Everything goes wrong all the time. But yeah, anyway. So yeah, I wouldn't have a problem trading it. With RSI2, it's always using a stop. Even the account I'm running, this account that I'm running, which has done 36% this month. You know, it's stuck in the pound odd at the moment, and this is using the position trader EA. So when this gets to a 1% loss, or 1.5% loss, I can't remember what I got it set up to, but whatever I've got it set up to, it would close these positions out. It takes loss along the way. We've got a load of alerts going off. CAD Swiss 225 ADR, Odd Swiss 150 ADR. That's the one I'm long on FTMO. Look. Nice. Position trader EA can be set individually on each pair. Yep, has to be. All my products, none of my products are multi-currency. They work on the currency you put it on, the chart you put it on, the time frame you put it on. That they all do one thing on one chart. If you want to run it on 28 pairs, you open 28 charts. Yeah. You get EAs get into all sorts of trouble when you start running multi-currency EAs. Can do. And it's a lot harder to do on MT4 than it is on MT5 as well. And one of the other reasons I keep things like that is because it's simple for me to keep updating them and doing things when necessary. With multi-currency ones, you get problems in the marketplace with them as well, because testing is hard. Any EA that you upload onto the MQL5 marketplace for sale has to go through rigorous testing for various things. If you use multi-currency, it's really hard to get them through testing. So that's the other reason. So yeah, stick it on each individual chart. The reason this specifically the position trader EA works in this way is because you are able to take individual trades based on any strategy that you trade and turn it into a position trade. So it has to work on individual currencies because you're going to want to do different things on different currencies. If I fancy shorting this now because it's 225 ADR and extended almost to the 80 level on the hourly, that's why I'm pressing the button. It's going to be a different reason I'm pressing the button on another pair. Or I could be saying I'm going to press the short button here because we just filled a propulsion gap where we're likely to find some sellers coming in. Yeah. So it needs to work individually. Right. So those are your ADRs. Obviously, pinch of salt on anything Swiss related today. Yeah, this is a fundamental news event. It is an interest rate drop that we were not anticipating. Therefore, the market is reacting as it should do, which is selling the crap out of the Swiss franc because they were not selling it because they were told it was not going to be a change. Forecast was 1.5. They delivered a 1.25. So me reverting anything against the Swiss today, you are standing in front of a steam train. I would wait for the steam train to stop and then try and get back on the steam train. That's the best thing to do. So I'd leave all those Swissies for the moment. Swiss yen is very extended. Again, this one's come down, obviously. All the other yen pairs are still weak. We're still rallying against it. Pound won't be so much, but everything else is rallying against this yen. Yeah, this yen is massively weak. It's getting run over by everything. And the Japanese have just said this morning, you keep doing this and you watch what happens. Yeah, so I'm not interested in really longing it. I am interested in shorting it, but I'm going to give it today. The other thing, we got this triple witching tomorrow, which could really, really, really move. We could get a 300 ADR off of this tomorrow. without an intervention. So kind of interested in that as well. Right, so those are your ADRs, RSIs. We've got quite a few. Let me just see what's going on with the indices. Hedged on the Dow and out of the long. Also long on the S&P now. Out of the NASDAQ. So NASDAQ was a clean break to profit. S&P is a clean break as well. And I've got a hedge exit about to go in on the Dow. Still rallying. Okay, keep an eye on that in a sec. ADR upside today. This could run for a bit. Weird divergence. Look, we got the NASDAQ coming down still. The S&P driving against it and the Dow driving against it. So we've got divergence in play, which doesn't help anybody. Just while we're looking at these, I'm not going to be trading tomorrow on any of the indices at all because of the potential moves we're going to get on this triple witching or quadruple witching, whichever it is. You tend to get massive moves. So yes, while they have the opportunity to be incredibly profitable, they also have the opportunity, especially if you were to try and hedge, to get you into very big trouble. Something that could move 25R against you, it's going to hurt. There's a lot of drawdown. So I'm not going to bother trading tomorrow. If you want to trade it tomorrow, make sure you use a stop loss and obviously scalp. But if you can get into a scalp and get it to a break even and you can hold it, you've got a massive opportunity for making money tomorrow. But as I said, go back and look at the previous triple witching days and see what happens. They're big moves. Right. There's a lot of volume coming in today as well. So RSIs today. Aussie yen is extended to the upside, as we know. A lot of these yens are. So Aussie yen is an H4 RSI extension. We're above the 80 level again. As we know, the yen is absolutely dead on its feet. Nobody is interested in anything but carry trades on the yen, so it's long onlys. All these yens are massively extended, but the one that we're interested in is the US yen, because this is the one that's got the potential to trigger the second intervention, or rather the third intervention if you count that. So we're watching this closely. If we can get up into the 100 to 125 ADR and sit around up there today, if the PMI numbers come out positive for the US, we're going to be running straight into where the Japanese did that. So I'm holding this one at the moment. So these are all massively extended on the 4-hour RSIs, or not massively, but they are extended on the 4-hour RSIs. Aussie yen specifically is because we've had a strong Aussie off the back of the potential rate announcement for an increase. So yeah, big extensions, but what we are finding is that more than that. So not the greatest thing to be shorting at the moment. The only other extensions you've got are Euro odd, extended to the downside. This is a good looking long at the moment, but the fundamentals are against you. We're short on the Euro because of the interest rate drop. We're long on the Aussie because of no interest rate change and potential for another 0.25%. So the fundamentals are short on this. So I am waiting for RSI extensions and ADR extensions to the upside to short the Euro pairs. So I don't really want to get long on that. Pound odd also extended. US dollar Swiss 175 ADR. Swiss franc still getting creamed. Aussie dollar again long. Pound neutral, starting to get bearish on it, but not bearish on it yet because we've got another month, 6 weeks to 2 months or so before we're going to start to see a drop in that pound interest rate. So it's going to be driven by news in the way in the run up to that. We're also going to get the market at some point in the next 6 weeks or so starting to factor a drop in interest rates, and we will start to see weakness coming into that pound. With the Australian dollar being strong, again, that one would much rather be looking for shorts on it. But it is nicely extended, but there is a chance you'll get an accumulation drop because the fundamentals are much more that way now. So not the best, excuse me, but got a lovely propulsion move off the news with the Australian dollar. So good propulsion targets. That's a beautiful support, which hasn't been tested yet. So we got 150 ADR potential upside. Nice wicks going in on it at the moment as well. So we've had 2 rejection wicks going in. If this candle closes higher than that low, which it is at the moment, and then we get a bull candle coming in, looks like we are hitting a brick wall in this propulsion gap. Yeah. So this is the last place they bought from. Yeah. So we had a massive long accumulation for 3 weeks, and then a propulsion move and a retest of the propulsion move. So they're adding back in at this level. But probably only temporary. So there is an opportunity for a long there. That's nicely extended on the hourly as well. And then apart from that, we've just got hourly extensions. So Aussie Swiss, again, all Swiss francs, US dollar yen, RSI high alert. It's getting close. Aussie dollar Swiss, yeah, be careful trying to short this. If you do want to try and mean revert this, do not get too greedy. I would not want to go anywhere into that propulsion gap, yeah, as a target. Same with all these Swissies. So CAD Swiss, yeah, not going down. CAD yen, that's massive extended on the hourly. Look, above 80 now. I'll come back to that one in a minute. Euro Swiss, massive extension. We've got New Zealand Swiss, again, massive extension. Be careful trying to get reversions on them, and US Swiss. Yeah, so potential for these literally to just flag and then continue tomorrow. Yeah, so the market obviously is going to be coming out of the Swissy for the interest rates. So the other ones we've got are CAD yen, very extended up to the 80 level. I just wanted to look at this. That was the last 80 extension that we had. We had one obviously on the intervention, which you can ignore, and we had one there. So this is the biggest, strongest extension we've had on the CAD yen all year, pretty much, and certainly since that last intervention. So the market really running against this yen at the moment. If you want to short anything against the yen, the US and the CAD are the two that you're going to get the best response out of, because the Japanese will liquidate the US assets, making the US weak. The US will bring the CAD down. So that's very nice as an extension. And obviously the US is now up at the 80 level as well. And again, we don't get up here very often. When you do, you tend to come down. So, but right now, it's PMIs tomorrow. So there is potential for positive news on the US, which will drive this even further. So it's not quite ripe yet. I would wait until tomorrow. US Swiss we've looked at. New Zealand Swiss we've looked at. The other big extension we have was, oh yeah, it was CAD yen, wasn't it? And CAD Swiss. What was the other one? Aussie yen, Euro Swiss. Yeah. So pound odd and pound CAD are the other two that are extended on the hourlies. That's just extended and embedded. Just about got divergence on that. Nice bullish price action going in there, like it. And pound CAD. So it's kind of time for me to get out of this, I think. Quite. Might go a little bit more. So plenty of opportunities there, but be careful with the Swissies. And obviously be careful with the yens. If you're going to get into any yen, I'm really tempted to get into this, but I would only trade one yen pair, and it would be the US dollar yen, because this is the one that's really going to get the kick. If you're going to take a big risk on something against the yen, because you don't know if the yen intervention is coming or what's going to happen with it, and you're going to have to pay massive swaps, the US is probably the one to do it with, because it's going to get the biggest reward when the move happens, if it happens. However, it's also going to cost you the most money because the interest rate differential is the highest. So the interest rates are the highest on the US and the lowest on the yen. So that is the biggest interest rate differential, which means you're going to get the biggest swap. So there's double-edged sword, that one at the minute. Re-hedge the Dow. Not good today. See where that goes. I tend to get out too early. I was long on all Swiss pairs and in quite some DD, but should have let the profits run. I'm still too much afraid. Yeah. I mean, there's nothing wrong with getting out in profit. Aussie yen weekly range just hit. You know, I've banked. I haven't got any Swiss running on this account, but on this account, for example, so yeah, I mean, you look where I banked the CAD Swiss, yeah, and look where it is now. Yeah, but the reason I banked the CAD Swiss and the other Swiss pairs there is to bank 10% profit. So, you know, I could have had 20% profit, but how do I know what it's going to do next? The market could easily have hit that high and come back to origin, and I would have got none of that. Yeah. Take money. You can spend money. You cannot spend a wish for holding it so that it goes further. So New Zealand Swiss. Yeah. Look at my bank on the New Zealand Swiss. This shows you, this is a really good chart. This shows you how fast that was moving today. Yeah. So I pressed the close button here. I got one execution there, one execution there, one execution there, one execution there. Yeah. And it's basically a case of, you know, it was moving so fast when I asked for executions, the market, they went out, they're obviously farming these orders out, because normally if it was a demo account, you'd get everything shut like that. But obviously, because this looks like this is going out to dark pools, they're actually getting these orders properly filled, which is why it's taken so long and they're staggered. But look at where I got out. Look at where we are now. But this is all to make money. Yeah, it's not for pride. It's not for, hey, look, everyone, I got a 225 trade. It's paying the bills. Take the money. Don't beat yourself up because the market goes twice as far. Your job is not to catch the bottom and the top. Your job is to take some money out of the move. Yeah. Make money. That's what your job is. It's not the glory of getting, hey, look, everybody, I got in on that reversal alert and I got out on that reversal alert. Best possible entry and exit. Now, take that and that. Take some money. Don't go for the glory. You're never, ever, ever, ever going to get it right. Yeah. I've had the odd trade, and I've posted them in Telegram sometimes, where I've got out literally at the high of the candle and then it's collapsed. And I've gone, look at that. But I've said that because to prove the point that this doesn't happen. Look what I've just done. Yeah. You don't do that. That's not the real world. You take some money. Look, New Zealand dollar Swiss. I've got a couple on that at the moment. Going to close those out with $1,000. Because it's $1,000. I don't know how far this is going. It could go to 225 ADR. I haven't got a clue. But what I do know is there's $1,000 there. US dollar Swiss. Got 1,000 on there. Still, that's one I've let run. But, there's just stuff you got to bank when you have it, not when you think is the best or the worst time. You just need to take it to pay yourself. Because if you don't pay yourself, and this is the thing with this strategy, with the RSI2 strategy that I'm trading here, I'm banking it every day. So I open up the chart in the morning. If there's profit, I take it. Because that is the point of the strategy. This RSI2 strategy is designed to take advantage of intraday swings. So if I get in at the end of the day, because RSI2 is extended, and I wake up and we've had a candle that's gone like that, and that is equal to whatever I fancy, take it. Yeah, your downside is limited. You can't go wrong. Yeah, you're going to lose at sometimes, but your upside is unlimited. You cannot ever hold for the risk-reward ratio you want, because there will be a down candle at some point that will scare you, which is why you shouldn't look at your charts. When you enter a trade, you shouldn't be constantly looking at your charts. What you should be looking at is your P&L, because a down candle is going to scare you to death. A P&L fluctuating like that isn't going to scare you. That is worry. That is just what's going on in the market. Normal market movement. Have you started trading yen again? No. Not yet. The only reason I'm interested in it now is because of what the Bank of Japan said last night. Yeah. But if you remember, if you go back to this trade on the US yen and my exit, yeah, they were talking about intervention at 155, sort of around here to here. And I was like, it's coming, it's coming, it's coming, it's coming. We sat there for another week. We were like, it's coming, it's coming. Every single day on Financial Juice, Suzuki or Ueda was coming out and saying undesirable FX moves are going to be met with a response and blah, 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 the usual stuff. We are watching FX moves carefully. We are closely monitoring the FX market. Undesirable moves will blah, 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 blah. They were saying it for weeks. 1, 2, 3, 4, 5. Did it. Right. Today is the first day that they have mentioned it since the second intervention. So we are 1, 2, 3, 4, 5, 6, 7, 8 weeks it's taken. And the reason I think they've said it today is because we finally broke intervention level 2 and we're holding. So they're like, right, we can see you guys have put pressure on. Yeah, there's an ascending wedge. We're going to break it. So if you push us, we will push you back. Last time it took weeks for them to actually do it. This time, I think they will probably do it back again at the 160 level, which is why I'm interested today, because tomorrow with PMI figures positive, we're going to hit it. If PMI figures tomorrow are negative, we're not. And if we break back down in here, the Japanese will shut up. They were throwing false bananas, as Brian said. It's basically, you can't tell. This is the thing. I keep saying it, and it's part of the core of the bootcamp. You cannot time the market. There is no indicator. There is no fundamental. There is nothing available to us as a human race that allows you to time when a market move will start in a direction. Don't care what any of the gurus say. They don't know. No one knows. The moving average works sometimes. Sometimes it doesn't. RSI works sometimes. Sometimes it doesn't. Everything works sometimes. Sometimes it doesn't. The Bank of Japan saying that they're going to intervene works sometimes. Sometimes it doesn't. Look at this chart. Look at where we thought the intervention was going to happen previous. I said, didn't I? All the way up here, the Bank of Japan was saying on a daily basis, if you keep pushing us, we will intervene. And I said, any minute now, probably at 150, there's an intervention coming. There it is. That's what it was. And I said, after that happened and it was pushing again, and they started saying again, if you keep pushing us, an intervention will come. There it was. Yeah. Tiny in comparison to the previous interventions. And then they said it again as we broke that level and the market gave up. They started rallying. Again, here they started saying, we're going to intervene, we're going to intervene, we're going to intervene. The market stopped and it dropped. And I said, there you go. That is it. That intervention worked. Bang. And then it failed. And then we were saying for literally all of those weeks above that 150 level, the Japanese were panicking. Yet I couldn't time it. I knew it was coming from here. It took months to happen. And I had to get out and I had to take that loss because they did it the day after I got out. Or was it? It's a few hours, wasn't it? I mean, it was literally hours. Look, that was my last exit. That's where I got out of the bulk of the position. Yeah. Literally 24 hours before it happened. I couldn't hold it. That's why they call it a squeeze. You get squeezed to a point, you just go, nah, give up. Then they do it every time. So that's why I'm interested in it now. But I will only trade this. And if it gets above that level, I'll be off. So it's one of those, I don't know, but it's a gamble. It's an absolute gamble trade. We do not know if that 160 level is then now the intervention level. The 150 level was the intervention level. Then it wasn't the intervention level. Now the 160 is the intervention level. Will it be the intervention level next time? We don't know. Wish we did. Wouldn't that be a good idea to go with the flow when we see a rally like that big candle and get in and out fast with a small amount? Yeah, if you want to. It's called scalping. If you want to do that, do it. There's a million ways to make money in this market, yeah? As long as you understand that the market is binary, it only goes up and down and it moves through time. There's only three things that can happen when you press the sell or the buy button. Your trade will either go into profit, into drawdown, and it will stay there through time. That's what happens when you press those buttons. Yeah. Whether you use a daily chart, a 4-hour chart, an hourly chart, 5-minute chart or a 1-minute chart has got nothing to do with making money at all. There is no good time frame. All the time frame is a representation of price over time. So all this is saying is for the last 5 minutes, it's been coming down. What's that got to do with the next candlestick? Nothing. Absolutely nothing. Because it's been coming down does not mean it's going to continue to come down. Yeah, if you see a big propulsion move go into the market, one of two things happens. An A-shaped recovery or a flag continuation. Those are the only two options. That's what happens when you get a propulsion move. So when you look at these Swiss franc moves today, and I'm saying probably best not to try and mean revert these, that's my opinion based on what I've seen in the past. However, I do not know if they will use that, or whether the market will just completely undo this move in the next 3 days. One of those things will happen. There's three options here. One of them will happen. Guarantee it. Come back tomorrow and I'll show you which one. But I don't know. So if you decide now that you're going to press the long button because of the size of that, where do you get out? And if you're going to get in there and you've decided you're going to position trade it and scale in there and scale in there, and if it does come down into here, scale in there and hope that they use that as resistance and scale in there. If it does an A-shaped recovery, when are you going to get out? What's your plan? Yeah, trading is about planning your trade and trading your plan. You've heard it a million times and it's 100% true. Every time I press the button or every time my EAs get me into a trade, there's a plan. Yeah, there's a plan for what happens when it works. There's a plan for what happens when it fails. So at the moment, I'm in the New Zealand dollar, US dollar. Yeah, I've taken a long position. There. Yeah. My plan is for it to push up and head towards that propulsion gap. My backup plan is if it pushes down below that low, I'm going to take a second entry and average in, and then I will move my target to that propulsion gap. If this support fails and it pushes down it will probably come down with a large move, which will flag and drop. That will then become my target to the upside. Yeah, there's a plan. I have no way of knowing whether it's going to do that or that. It's completely random. And it's based on fundamentals and bank order book size. That's it. So if you were to trade on the 5 or the 15-minute chart and wait for a propulsion move, and as soon as you see one of these blue blocks appear, hit the buy button, do it. But have a plan. It's either going to be a fixed stop loss and a take profit at some point, or it's going to be a scaling. But if you're scaling into something on the 15-minute chart, you're basically trading chop. You need a multi-time frame approach, which means you use a higher time frame which has done something, and then you use the lower time frame to try and time an entry. But you can't time an entry because you don't know when it's going to move, because you're not in charge of the movement. It's like saying I'm going to stand on a platform and wait for a train to come. Hopefully one will come along. I haven't looked at a timetable, but I need to get there, and hopefully there'll be a train. You don't do that, do you? You go, there's no train, I'll get the bus. Or there's a train, I won't bother getting to the station until 10 minutes before it. You don't stand there for an hour. Same for this. You can't time this. So there is no right or wrong. There's plenty of people out there, right? And there's a video that's just gone up recently by Ali at Stat Oasis. And it's about, he calls them FVGs, obviously, because they've become known as FVGs because the guy that made 2.5 million selling you crap courses called them that. But they're actually called many things. They were called a wide range bar from the guy that invented the things. I call them propulsion gap because that's what I was taught. Now ICT's told you that they're called FVGs. So Ali's using the word FVG because it's popular and he's a YouTuber. Anyway, forget all that crap. But one of the strategies that he shows on his video is when you get a propulsion gap or fair value gap, whatever you want to call it, you basically buy it and you sell it the next candle. And if you look at when these form, what are they? A large bank order. So one of two things is going to happen. The bank has completed the order or they haven't completed the order. If they haven't completed the order, they will add to the order. If they have completed the order, they will stop. And then it's down to whether or not there's a bank with an order of an equivalent size to drive it back, or there's another bank that steps in and goes, yeah, I'll have some of that order. That's one of the strategies. You can do that on any time frame. Look at them. Propulsion gap forms, sell it. Propulsion gap forms, sell it. Propulsion gap form, sell it. Propulsion gap form, buy it. Yeah. But there's many instances where it won't do that and it will come back. So as long as you've got a plan to get out when one of these is formed, yeah. But the thing you've got to bear in mind with this, for example, is these don't form until you've got 3 candles. So you need a candle, the one that forms the gap, and then another candle. You'll often find by the time you get that signal was painted there. So the move has already done that. So what do you get out of it? That. Where's your stop loss? There. What's the risk reward ratio? 0.5. They're hard to trade. If you get a big candlestick put in like that, and you take it straight away, there's no guaranteeing it's going to form a propulsion gap because it might trade all the way back down and then come back up to there. You can't do that either. Very hard. Best thing to do is to use these as targets because it's plotted on the chart, clear as day to see. Every time one of these forms, it gets filled. So use them as a target, not as an entry. Use a condition for an entry and use these for a target. But do what you like. There's a million ways to make money as long as you understand that it's all about risk reward and completely random movement that you cannot control. Come on, Euro Pound. I'd like to get out of you today as well. What the gap fill? Unlikely, it's 150 ADR, but you never know. Yen squeezes are too painful, expensive, and last for eons. Yeah. Ain't touching that disaster again this year. It's the gamble. That's what killed me, that yen. That's what killed me. 20% of that loss was swap. 20%. Because I held it for weeks, 6 weeks or so. So, yeah. But with this, the play with this yen move, the reason I'm interested in it now is twofold. One, we've broken that level, which was the intervention level where they put the second move in. That was the Bank of Japan's second intervention. Yeah, so they obviously have that as a price point. We have not broken it until today. And it just so happens this morning, they were anticipating that, I guess, and said, we're watching this very closely. Yeah. And the fact that we're only going to be roughly 150 ADR away from that high, and tomorrow's a triple witching, and tomorrow is PMI day. So there's a coming together of catalysts, which means if it's going to happen fast, it's going to happen at that point on a day where you've got a news event that will drive the US, on a day where you've got a triple witching options expiry, the day after the Bank of Japan have said, we're going to intervene if you push us any further. Yeah. There's a multitude of signals. Not one of them is an indicator. That one is, I suppose, it's a support resistance, but everything else is just circumstance. And hit that button, stop loss up there. If it gets there and they don't do it, not interested. If it does that for the next 4 weeks, there's nothing I can do about it. So I will have to look at it and go, when shall I cut it? And all what I will see is my P&L just going like that with swap. And at some point, I'll probably just go, I'm going to take another one. And it'll probably be there. And it'll either then work and it will pay me a fortune or it won't. But there's no technical reason. It's just a hunch. It's one of those trades, exactly the same as this one. I said, didn't I? I'm going short. And I caught that and it paid for that. But it wasn't any other thing than this hasn't worked. They're going to do it again feeling. And they did, because that's what they've always done. If you look at previous interventions, it comes in two parts. That was luck, pure luck. I said, didn't I? When I got the trade and when I got the money, I said that was gambling and it was luck, pure luck. I timed it within 24 hours. Yeah, I'm just trying to time the next one. I don't even know if it's going to happen, but it's just, that's all the trade is. It's not based on anything clever. It's just, we're used to it now. We're used to these moves. This is what they do, isn't it? Right, false bananas. You trade the Swiss pairs again? Not on my main position trading account, no. Not at the moment. Not especially not after today. But I'm trading it on FTMO. And I've got it running on RSI2 at the moment. Because it uses a stop. Yeah. There's no problem. You can trade absolutely anything. And this is what I keep saying about these people that go, I'm a US dollar yen trader. Really? What do you do when the US dollar yen doesn't fit your strategy? Just not make money? Not pay the bills? Yeah. So anything that uses a stop loss, you can trade anything that moves. Any instrument that goes up and down by a decent amount on a daily basis. If you're using a stop loss, you are literally hoping that when you press the button, it goes in your direction. Whatever strategy you use to get in, whatever signal you use to get in, doesn't matter, does it? So there's no problem trading the Swiss franc if you've got a stop loss in place. If you haven't got a stop loss in place at the moment, from a position trading perspective, and this is why I'm not trading it on the position trading account with the yen or the Swiss, it's because I don't know what the long-term movement is on that pair. And I don't believe that it will be orderly. I think it will be nuts, which, they have proven, haven't they? Yeah. That is not conducive to position trading. That is the worst possible scenario you can have as a position trader. Something that goes against you, that you scale into, and then stalls for weeks, and then starts a second leg. It's the worst thing that can happen to position trading. Yeah. That is what we look for, market structure. Yeah. That is a squeeze. And it's that exact movement that we're seeing from multiple yen and Swiss pairs at the moment, because they are just being squeezed. The yen can't do anything, so everything is killing it. The Swiss do what the hell they like. So that's why I'm not trading it. But if I was using a stop loss, for example, if I took an RSI extension there, I would have got out of that, but I'd have had a stop somewhere, whatever, which would have gone, that didn't work. So then I'd have gone, yeah, I'm going to go for it again. And at some point there, I probably would have gone, screw this, I'm out, and taken a break even. But if I hadn't, I'd have taken a loss. Not a problem if you're using a stop. And all my stops are roughly 1.5 ADR. So I'm giving them plenty of breathing room to do what they want to do. Are you having a damn good month on your RSI2 account? Yes. Like I said, that strategy in backtesting is absolutely killing it. It's very, 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 very high risk though. Yeah. The way that I'm trading it on the hourly chart using daily RSI extension and multiple trades, 0.1 ADR apart. Yeah. It's super high risk, but it's using a stop. So it's just, it will hemorrhage cash at some point. But when it doesn't hemorrhage cash, it's a little bit like, remember the H1 hedging strategy that I ran for the whole of last year? Yeah. So I ran H1 hedging strategy for, was it 9 months or 11 months on demo account? And we looked at it every week, every month, and we were looking at this thing just making money. It made 150% return in the year. I stuck it on a live account this year, remember? Hemorrhaged. Because it got in at the wrong time and it just got overexposed and over leveraged. So it was an over leveraged account. It was trading too many pairs with too high risk. So that's the danger with the RSI2 strategy. However, because RSI2 is using a stop loss, it will not hemorrhage in the way that the other one was. Yeah, because on the VPS I had it running automatic drawdown control. I was doing manual drawdown control, which is why it failed, because I wasn't doing the drawdown, because I had too many accounts and too many fingers in too many pies, which is, again, it's a lesson, isn't it? Remember this? I keep coming back to it. Yeah. What happened to me at the beginning of this year is exactly what I preached to everybody not to do. Yeah. I saw everything like hitting massive amounts of money, and I decided to go, right, I'll do that, but I'm going to do it better. Nah, can't do it better than an EA, because an EA does exactly what the backtest is telling you is going to happen. That's where I got to. And every time, I say, this is the point everybody gets to in their trading. And if you're not there and you haven't been there, sorry, it's coming. You will get there. You will go wrong and you will get knocked straight back there, because this market will just show you that it can do what the hell it likes. Doesn't matter how many back tests you do that say you've never been there on that indicator, it will get there and you will get hurt because you do this. Yeah. And it's just this is why I have this document, because it is massively important. Everybody goes through this journey. Yeah. Doesn't matter who you are, how experienced you are, market will kick you in the arse at some point. An alert. Always does. But anyway, yeah. But yeah, the RSI2, I need to drop the risk on it, because it is, it's making very big profits, but making big losses. So you look at the drawdown on it at the moment. It's in 6-8% of drawdown. This moves very fast, this drawdown. But it has these massive days. But it also has losses as well. This looks like a fantastic, this week it's done 18%. It's had losing weeks, which have been like 5, 6, 8% as well. So, but this is the beauty of it. There is no take profit. So when you get a decent sized position built and the thing takes off, that P&L gets up very, very, very quick. But when it goes down, it starts scaling out for you. So it's great. It's a great set file. But you need to watch it manually. I have your position trading strategy and it works perfectly. I'm just looking now for something to add an extra 2 to 3%. Up your risk. Add a couple of extra instruments. You're missing the point. If you've got something that works perfectly, you wouldn't be looking for 2 to 3% extra, because it's working perfectly. Yeah. That's greed. I've got something, it's working, I need more. No, you don't. You need to just increase what you're doing. So whatever your balance is that you're trading with, add 10 to 20% onto your balance. That will up your lot size. That will up your return. Yeah. Trading is trading. When you get into a position, it goes your way or it goes against you. Yeah. You can't force the market to give you more money. The market will give you what it gives you based on the movement that it makes and when you press the close button. So if you up your capital, you will automatically up your size. If you up your size, you will up your return. Don't need another strategy. You need more capital. Everybody gets this bit wrong. And it's took me ages to figure it out because everybody is trying to take a 5K account, right, and make 2 to 5K a month. You're not going to get 100% return a month. Yeah, you're going to get 5 to 15% on average. You're going to have big months at 20s. You're going to have losing months at minus 10s. Yeah. But on average, you're going to do something like that. So call it 10% to be safe. If you need to earn 5 grand a month, you need a 50K account. If you want an extra 2%, get a 54K account. Ta-da! You just made more money. That's the way it works. You don't need another strategy. You just need more capital. Make sense? And you need some luck. Yeah, you need to be long on the Swiss 3 times or twice or whatever you're doing with exposure when the Swiss franc collapses like it has today. This is where these are paydays. This is why I call them paydays. Yeah, we have to wait and sit through drawdown for weeks on end waiting for payday. Paydays are caused by news. These big market moves are what we get paid on. Yeah, 90% of the time the market's doing this. Then you get a payday. Yeah. This is the job sitting here. This is why I do the streams, because otherwise this is why I was doing gardening this morning, because there is no point in doing anything and sitting here and looking at the chart and going, ooh, it moved up this hour. Looks like it's going down this hour. Oh, it's gone up again. Pointless. Your FTMO account, what's your percentage risk per trade? About 1-ish. 1.5-ish. It's basically, so I'm in a sell here, and I basically just drag the stop loss to about something or other. I haven't got a risk. It's about $1,000. I don't really have a set risk. Risk should be based on ADR. So it's and levels. So I'm looking at this at the moment. Yeah, so this is a propulsion gap. I haven't got the indicator on the chart, but this is a propulsion gap. So my stop's beyond the propulsion gap. If they invalidate that, it means there's no sellers left in the market. So therefore, the trade's not going to work. That's where I put my stop. For me, at the moment, I'm happy to lose 1,200 to 1,400 on a trade. That's 750, so I don't need to risk that much. My target obviously isn't there. It's wherever price goes. So if this now does that and that, that's my exit, because that is money. I'm not going to go, oh, I have to get to that low to give me a positive risk reward ratio. I'm getting out when there's green, because the goal of this account is different to normal. The goal of this account is to hit 8%, not to make money, not to be responsible as a trader, not to follow my system and my strategy to the letter. My goal of this account is to hit 8%. How I get there is entirely up to me. which is why you'll never last long in prop, because there's no consistency in prop, unless you use an EA, obviously. Yeah. I should be, according to my system, trading CAD yen, odd yen, euro yen, US yen at the moment, but I'm not, because I've got a brain. But an EA would take a trade on that and that and that and that. Yeah, it would also be trading the New Zealand dollar Swiss and the US dollar Swiss at the moment. Crazy. This is why I keep saying you cannot have an EA on full automation. EAs have got to run with you watching what's going on, because you're the trader, not the EA. The EA is a dumb instrument that executes trades. I don't want to 2x the account each month. I want to compound from 5k to 500 in 3 years. Well, that's a pension fund, isn't it? Good luck with that. Compounding doesn't work. Just doesn't work. The problem with compounding is if you're going to start with 5k and your target is 500k, okay, that's your journey. Okay, what is going to happen in that journey? When is your losses going to come in that journey? So if your losses, because your strategy is going to have a P&L that looks like this. It's going to have something, there's going to be something really bad happening in your P&L. Yeah, because P&Ls don't do that. If that comes towards the back end, you're going to lose over 100 grand. If that comes at this end, you're going to lose $1 grand. What's going to happen to you psychologically when you see your P&L go from 380k to 280k in a period of 6 weeks? What's going to happen to your psychology when you see your P&L go from $1 grand to $4 grand in 6 weeks? That's the problem with compounding. You will not be able to do that. Try trading a £500,000 account and trade it the same way as a 10k or a 50k account. The psychology of managing that amount of money is totally different. Your P&L goes up and down. This is why I say in the bootcamp, this is what we focus on. Yeah, forget that. Money is irrelevant. Focus on percentage return, because percentage return on a 1k account and a 100 million account is the same. 1% is 1%. Doesn't matter what the account balance is, that's the same. However, a $100 profitable trade and a $100,000 profitable trade are a completely different thing. Yeah. So it all looks great on paper, but what's happening in your life that you think you can turn 5k into 500k? So go from being somebody that can only afford that to being a $500,000 person. Your lifestyle is going to change. Everything is going to change on the way. Yeah, when you get to £250,000 in the bank, you're going to want to go and buy a house with that. Your account balance goes back to 5k. If you get there. Yeah. It's not the way it should be done. You should have a big balance, or whatever your balance you can afford, and trade the same all the time and withdraw money and live. This isn't a job where you can turn that into that. I don't know anybody that's done it without gambling. People have done it. But on demo accounts and things like that. Or, people that have got lots of money, you can do that. You can do these challenges. I've doubled an account. I've doubled an account multiple times. But eventually you will lose that, because compounding an account will be roughly 80 to 100% a year. Yeah. So turning 5k into 10, 10 into 20, 20 into 40, 40 into 80, 80 into 160 takes 5 years. Yeah. 160 into 320 and 320 into over 500,000 takes 2 years. Big difference. You've got to have 5 years worth of consistency in the market. No crashes, no COVIDs, no stock markets going mental, no wars kicking off. You've got to have 5 years of stability to get that normal strategy development. If you'd have been doing that in 2016, you lost the whole lot in 2020 when COVID happened. All of it. That 5K was up at 400 and then it went to zero. That's what will happen. Market doesn't do that. Doesn't stay the same forever. Compounding on paper is fantastic. It's a spreadsheet. It's not the real world in any shape or form. And everybody that sells you these courses on how to compound it, people that have blue Porsches, for example, I don't follow him anymore, but anyway, yeah, he'll sell you a course for $1,000 that tells you how to compound. The beginning of that course tells you you're going to blow accounts. Really? I just paid £1,000 for a course that's going to tell me how to double an account, but I will actually blow it as well. This is the real world. Is the RSI2 strategy settings you are trading at the moment the one you posted in the Telegram? No, yes, it is. It's a variation of it. So I can't remember what I'm doing. I'm manually trading, you guys. You know, this is what I manually trade. So the EA executes the trades for me, and I'm watching what's going on. But what I'm doing at the moment is 1% risk, 1.25 lot multiplier, 0.1 ADR scaling. Single trades are exiting at 1.25. Multiple trades are exiting at 5. That's not happening. Yeah, I'm closing when I see $1,000 or so. 800 in case of one I just shut one out at 400 and something, didn't I? Yeah, I'm just closing that. The 5% is never going to get hit. The 5% is there in case there's a news spike and I'm not at the PC. If I get 5% profit, I want it to get there. Yeah. Drawdown control, 1.5%. I close out the entire trade. So if something draws down into 1.5% loss, it shuts. So I'm going to hemorrhage 1.5% down here when stuff goes really wrong. But as you can see by the P&L, it isn't often. The RSI2 strategy strike rate is 83%. Haven't got it here. But it's roughly 83%. Yeah, so you're right 80% of the time. You like this week. I mean, this week's not over yet, but like this week, it's 100% strike rate. Great. And the position trader EA, all I've changed on this, I think, from the set file is that's the one, isn't it? Yeah. So that's the actual set file. 1.25. Right. So the set file that I posted has a 0.75, 0.75, and a half an ADR stop. The reason I've changed that is to give more room to breathe and for me to make exits myself. Yeah, and the testing that I've done on the other strategy that I've been working on, which is very similar, has shown me that 1.5 ADR is and above is the sweet spot. Half an ADR, this keeps your drawdown really small. What I'm working here has a much higher drawdown, much higher risk, but a much higher return. So this, your risk, your drawdown, the amount of money your strategy will draw down is controlled by that. It's controlled by your risk. Yeah. The more you let trades run, the more loss you'll take, but the higher your strike rate will be because you're letting it breathe. Yeah, we know that the market spends 58% of its time moving within average daily range. So if you set your stop at half an ADR, you're going to get hit more than 58% of the time because the market is naturally just going to do that. It's going to move half an ADR. But what we're doing with the RSI2 strategy is we are getting in after a big, strong push. So the market is exhausted. So the likelihood is the half ADR movement that comes next is going to be in that direction. If it doesn't meet 0.75% and it goes up by half an ADR, and I see that, I bank it. But it's discretionary, yeah. So I'm trading kind of a hybrid version. But I would encourage you to backtest. Go and backtest and see what impact it has. So this is not running any yen pairs. I'm running US Swiss, Euro Swiss, Pound Swiss, Aussie Swiss, CAD Swiss, New Zealand Swiss, Pound Odd, Pound CAD, Pound New Zealand, Pound Swiss, yeah, Pound US, Euro US, US CAD. So I'm running all the majors apart from the yens. But I'm only running the Swiss because, you know, if it's wrong, it's wrong. Fine, I'll take the loss. Like I'm stuck at the moment in the Pound Odd. Yeah, so these trades, if this pushes down any further today, that's going to be a 3% loss. So you take 3% off of that, 11 point whatever, who cares? But yeah, take 3% off of that. Aussie New Zealand is stuck fast at the moment. That's a weekly, I think it's 150 weekly range on that. 175. So, you know, Aussie New Zealand's moved 175% of its normal weekly range. I mean, that is abnormal, isn't it? We don't get 175 weekly range hits very often. So there's nothing you can do about it. Yeah, I'm in it. But, you know, it's not hit the levels. Yeah, so, you know, it's not hit a point where that's going to shut out. So we'll do soon. Execution time is 1 hour, yeah. But again, you know, you can run it on the 4 hour. If you run it on the daily, you're going to get the higher the time frame, yeah. So the way that it works with the Position Trader EA, obviously, it works on candle close, yeah. So what you have to have is two things happening on the Position Trader EA. You have to have the condition met, which is RSI2 on the daily, being extended above the 90 level, for example, in this case. Yeah. You have to have price action going in your direction and crossing below a moving average. And the distance on candle close has to open above the next order entry and close below that line. So whatever that line is for the next entry, it has to do that. Yeah. So those are the conditions. So if you run it on the hourly time frame, you will get scaled in a lot of the time, pretty much 0.1 or whatever you set as your distance apart. If you do it on the 4 hour, run and execute on the 4 hour, those entries are going to be in completely different places because something could go push up, yeah, and then it could push down and push back up and form that on a 4 hour candlestick. That is not a signal to go short. On the hourly, you had 1, 2, entry, 3, 4. So the hourly would have got you in there and be ready to get into its next position. The 4 hour would not have got you into your second. Execute it on the daily, and basically you will only get one entry, regardless of what it does intraday. If that candle closes up there, we're ready for the second entry. If the next intraday goes like this, we're still not getting our second entry. If the next intraday goes like this, we're going to take our second entry. So on the daily, you're going to get a lot less entries. A lot less entries means much lower drawdown, much longer time frame for your trades. Profitability, pretty much the same. But the drawdown will be a lot lower on daily time frames. 4 hour time frames, a little bit more. Hourly, aggressive. Same strategy, but time frame makes a massive difference. So go and test it on an hourly time frame, test it on a 4-hour time frame, test it on a daily time frame. You will get completely different results. But the main difference you will find is the drawdown. The return to drawdown ratio will be a lot different. The number of trades taken will be a lot lower. Therefore, your risk is a lot lower. So I'm trading it on aggressive only because of the month, the year that so far has gone past. But it's too aggressive, I think, for running long term. For prop, hourly time frame, brilliant. In fact, for prop, but you got to find a prop firm that'll allow you to do it, because obviously it's position trading, and a lot of them don't like it because they think it's martingale. And to be fair, it is well, it's not martingale. Martingale, and again, this is why the prop firms come up with these rules. Martingale is you take a 1, a 2, a 4, an 8, a 16. Yeah, that's martingale. Going in with a 1, and then going in with a 1.25, and going in with a 1.75, that's not martingale. That's gradually scaling into a position, dollar cost averaging. But prop firms, some prop firms now are, no, that's martingale. Can't do it. Some prop firms, if you go in with a 1, and then you go in with a 1, and then you go in with a 1, they class that as martingale. Or they come up with a new name for it, one-sided trading. It's all manufactured to lose you money, basically. It's all manufactured to stop you being profitable. That's all it is about. And passing evaluations. That's all. That's, the more you do evaluations and fail them, the more money they make. That's what it's all about. For me, it doesn't matter. I don't care. I do what the hell I like. It's my money. So you trade it as you want to. But if you want to do in the position trader EA as well, obviously you can. If you just want to take one trade, so if you were doing this on prop, for example, if you set a 1% ADR risk, 1% of your account over 1 ADR, if you set your distance between trades to be 1.5, yeah, you will never take more than one trade at a time, because if you're scaling out, so whatever, actually that's wrong. I told you that wrong. So set that at 1 or whatever you want it to be. Your percentage drawdown, if you set that at 1.5, right, it's got to go 1.5 ADR against you before it will close the position. If you set that at more than 1.5, it won't be able to take a second trade because it will have been stopped out by the time it gets far enough away. Yeah. So for example, with FTMO, yeah, you can't get into more than one trade basically. If you have that higher than that, because it will stop you out before it gets that second one on. But if RSI2 is extended, you get into a trade and it stays extended because price has pushed up, you will stop out and you will get in again. That one normally pays for that one, which is why the strike rate is so high. But the profitability on it is not necessarily massive, yeah? The backtesting that I've done shows it doesn't make an absolute fortune on the daily time frame, but it takes like 3-5% drawdown. The overall total drawdown, I've got all these stats and it's published on this new website that the guy's done. From memory, let me see if I can quickly find it. I can't show you what it is, but I can't show you the website, but I might be able to show you the page. With the statistics on it. I just don't want to give anything away. I might get told off for. So this is the statistics. Ethan, got to go to the dentist at 4:30 as well. This is the statistics of the RSI2 strategy daily that is being run with the settings that I've been system parameter permutation testing for him. So the percentage win rate is 84%. Yeah. Max drawdown on account is 7.65. Yeah. So from a prop perspective, right? This is a decade of system parameter permutation testing. Yeah. So what we've gone with is an in between, not the best, not the worst, but something in between, because it's got the much higher probability of happening again in the future. So the maximum drawdown it ever achieved is 7.65. Think prop. What do they all give you? 10. This would never blow a prop account, right? But it will only return you 16% a year, right? So think 100K prop. You're going to make 16 grand. Not enough to live on for most people. So you're going to need a 200K prop, or you're going to need multiple 100K props running the same strategy. Every time you run a 100K account, you get 16 roughly. It's going to be bigger. I mean, and again, right, so the other caveat with these statistics, and this is what I've been talking with him about. This, right, was COVID drawdown. It did 11.5% max. Yeah. So in 2020, the strategy made a loss. If you take COVID out of the equation, yeah, the return on drawdown annually is double that. Now, we can't say COVID didn't happen. It did. But if you take COVID out of the equation because it made a, what was it, an 18K and a 12 or something? So from the run up to the drawdown was 11.85%. If you take that out of the equation, it actually did a hell of a lot better. But on average, you're going to be returning on a 100K. This is, which is a $1,000 risk, 1% per trade. You're going to be making around about 3K a month. The return on drawdown 7.49, astronomical. As it says there, minimum target 4%. A good, solid, robust strategy will return somewhere in the region of 4 return on drawdown. Yeah, 12 months, 10 months a year, it makes money. It doesn't every single year without fail. Every single year there was between 1 and 3 losing months a year. So on average, there's 2 losing months a year. 66 trades a month. So yeah, that's the statistics on it. But this is RSI too. It's not a secret. It's been out there with Larry Connors for decades. It's not a new strategy, is it? But it's never been applied, in my knowledge, it's never been applied in this detail to Forex. It is a stock index strategy. And the version that we've come up with is very similar to obviously what I do in my set file for the Position Trader EA. But test it on the daily time frame. System parameter permutation, test it. You run it through the optimizer. But it's fantastic. But every time you drop time frame, the drawdown goes up exponentially. I can return on a single instrument, I can return $250,000 minimum on each instrument with high risk settings on hourly time frames. But the drawdown will be over 50% of the account on the instrument. So you couldn't run more than 2 instruments. There's ways and means of making a hell of a lot of money very quickly, but it is not going to be consistent. Yeah. This is what I'm talking about with these guys that sell these compounding courses where you double accounts. I can do that, no problem. Not an issue. I can do 50% a month, easy. But I will do it, and I will blow it because you can't do it consistently because the market won't allow the system to work every month because conditions change. So multiple 100K props sounds like the way to do it. Yeah. That is what I'm considering. So obviously with prop you can get 200K. But the problem you're going to find, and this is the problem I'm finding, I think I'm going to find with FTMO, is they will have a reason not to pay you. Yeah. If they have to pay me 32K a year, right? That's only three grand a month. Not a lot, is it? Some months will be 5, some months will be lower. Yeah. It's not an issue. If you do it with multiple accounts, I think that's where you're going to run into a problem. So what you're going to have to do is find multiple prop firms which are stable and have conditions that you can trade within. Yeah. So number one, you want to use an EA ideally. And again, if you take the EA out of the equation, some of these RSI2 moves, and I've tested this risk reward ratio, but some of these RSI2 moves are, do it on this one because it's got the RSI2 on it, are unbelievable. Yeah. That one, for example, there. Just trying to find the entry on that one. So that's your RSI2 entry. Yeah, you had to hold it for a month, but look at the reward. You got to sit through all of this and all of that, and all this scary stuff. Holy crap, look at that. There's a massive bull candle that's engulfed the previous 4 days worth of price action. You've got to sit through it. This is the bit that the human being can't do. The EA can do this. And again, test it. Use a 5 to 10 ADR target using the position trader EA, and use a 1 ADR loss. This is trend trading, basically, isn't it? It's starting with mean reversion, getting lucky, and the market moving into a trend. Sometimes the market does this. Sometimes the reward could be unbelievable. Like the risk on that trade there. So the entry was actually there because it gapped down. But the 1 ADR stop would have been, you know, somewhere up here. You give yourself a couple of days worth of movement normally. As you can see, you know, a couple of days worth of decent movement. That's a 10R trade on $1,000 risk. That's 10,000 on one instrument in a month. Yeah. Imagine if you accidentally shorted 3 Aussies at the same time. That's a 30K payday. This is where prop's going to run into trouble. Paying you 30K, they're going to be looking for every excuse under the sun not to pay you out. Because that's what they do. The forums, the Telegram groups, the Discord channels are full of people screaming about not getting paid because they got caught on a technicality that was in the small print that was grey. And they decided it was their version of grey because you got paid. If it was your version of grey, it would have been black or white. Yeah. You know, this is the problem. It's not your money. It's not real money. They haven't got this money. They've got this money from other people's evaluations, but there is no trading going on. So there is no profit generated. So when you make profit on a demo account of 30 grand, they've got to find 30 grand. Yeah. They'll be doing that to try and get you out of it. So that's the only downside, which is why trading with your own capital is obviously much better to do. But I mean, look at this month so far. I mean, I've only been running this account this week. Yeah, all time this month. Well, I've been running it for a week and a bit. 4% return. This is £140,000 account with FTMO. It's 5.5 grand. Yeah, that pays my mortgage, pays my car, pays my food, pays for everything. Pays for a holiday for a family of 4. Hopefully there's not another one on the way. Yeah, so, you know, it's got a really good long-term edge with consistency, but you can tweak it to make it more or less aggressive. Yeah, so for prop, I would make it more aggressive, and I would be happy to blow accounts every now and again, but have those big paydays. But then again, you might want another couple of props running on a super, super conservative mode where it just returns you something like 15 grand a year. Yeah, a lot of people would snap your arm off to get £1,500 a month. EuroCAD ADR. Weakness coming in the euro. And it looks like potentially in the pound. No. Canadian dollar strength, this is. But anyway, something for you to go and test. Is it trading all pairs? So yeah, I'm everything but the yen. Not the yen. There's another strategy. The guy that I'm working with on this other thing website is got three strategies, three core strategies that he trades. One of them is just mean reversion. Mean reversion, as we know, is best used with relative strength index because that's, or Bollinger. I mean, it doesn't matter what you use really, but mean reversion is quick in, quick out, quick money. He has also a trend strategy, and he has a he calls it a momentum strategy, but I would call it a breakout strategy. Yeah. So there's only, as I've said many times, there's three things the market can do. It is either range bound, great for mean reversion. It is breaking out, great for mean reversion, or it is trending, not great for mean reversion, but you can still make money, but more difficult. Yeah. So the vast majority of the time, the market does that. So he has a strategy for mean reversion and for breakouts. And the breakout one is very hit and miss. The trend one is very low strike rate. But that is the bread and butter. And it always is, which is why there are so many people teaching mean reversion strategies and doing mean reversion, because the bread and butter is what the market does the majority of the time. Go up and down. So he's got three strategies. When you combine these three together, what you get is stability, huge profit, and this kind of works when these aren't the breakout strategy. So for diversification, if you have three strategies running three different market regimes, regardless of what the market's doing, one of them will be making money. Because you're doing mean reversion and you're doing breakout, those two will usually make money at the same time, 80% of the time, 83% strike rate. The trend strategy has a strike rate below 40%, but it will return 5R, 10R plus trades, even more. It uses an exit strategy, which is quite not unique, but it's not something I've really looked at before. But it means that it holds. But the holds will be months in cases, and not one strategy runs on anything lower than daily. He is a daily time frame trader. He scalps on 5 intraday, but the bread and butter is all daily. There is no H4, not interested. Nothing's working on H4, nothing's working on H1. You can adapt it and you can use it, but your drawdown goes up. He's about making money, and making money is done on the daily time frame, because the market's going to do this all the time, intraday. So you do not play in that area. You play outside of that area with your targets and your stops, and you let the idiots do whatever they want within ADR. You stay outside of ADR. Daily time frame. Yeah. You look at a daily time frame and how many days you need to hold stuff sometimes. Yeah. If you went long there on a pullback play, for example, 1, 2, 3, 4, 5, 6, 7, 8 days until you got paid. How many people got killed and lost 10% of their account that week because the market did what it does? Play there, you play there. Because that's what the market's going to do for ages, waiting for a news event to move it, waiting for a bank to get interested, waiting for a large order to appear, waiting for something that gives you the possibility of having profit. Yeah. Anything lower than that, you drop down. I mean, look at where this has gone this month. That's the monthly opening candle. That's where we are. We pushed up the first day of the month. We've mucked about all month. Where have we gone? We're on the 20th. Nowhere. Not gone anywhere. Got a hell of a lot of up and down, isn't there? We've had multiple news events. We haven't gone anywhere. Yeah. Perspective. So many ways to make money, but the real consistency is done. This is why I trade H4, M15, H1, M5. I don't get involved in anything lower than hourly because it's just rubbish. Get in on those timeframes if you want and use entries on those timeframes, but we're trading the high time frames. If TMO don't allow traders to use third-party EAs, yeah, would need the source code. So yeah, there you go. But, you know, You don't need. I'm trading FTMO. I'm not using an EA. This is all 100% manual. I'm using this dashboard. RSI dash. Daily RSI 2 9010. 4 hour RSI 10 8020. 1 hour RSI 21 9010. Yeah. Ping. Press. I'm not using an EA. Don't need an EA. It would be better to use an EA, but you don't need to. Hey, we have to go to the dentist at past. Ollie's just said, I've got to go. Ollie's my son. He's in the chat. Hi, Ollie. We've got to go to the dentist. Right. I'll see you tomorrow. So I'll be back tomorrow at 7:45. Tomorrow morning, trading the DAX and the FTSE. And we'll obviously have a recap of the week and see where everything's gone. All right. So have a good day. Ollie, your dad's a legend. Did you hear that, Ollie? Listen to AZ. He knows what he's talking about. So I'll be back tomorrow morning early. And if you need anything, let me know. If you're watching the football tonight, good luck. And I will see you guys next time. Have a good one.